Good morning. What's up, guys? We are live, and we are sitting flat as far as the market is concerned here so far today. I'm ready to go today. We have 12 straight base hit green days, and I may have just jinxed it. Hopefully we didn't. Let's see what we can get done here today. Now, we have crude oil inventories, 9:30 a.m. Central. We have Fed's Barkin speaking at 10, which, unless they mention tariffs, shouldn't be that big of a deal. 1 p.m., which will be post-stream, but just so you're aware, 1 p.m. Central, we have the FOMC meeting minutes. Okay, this is where we get the inside look at the transcripts for the last FOMC meeting. So we will see, as far as volatility is concerned, the minutes usually are a quick pop for maybe 5 to 15 minutes in terms of volatility, and then it's kind of over. But be aware, 1 p.m. Central Time, we have the minutes. All right, guys, we are about 6 minutes out from the opening bell. Let's see what we get. Again, we're sitting just barely in the red here today. This is about the most calm open we've had in probably close to a week. So as long as we can keep volatility up, which shouldn't be a problem here today based on the recent events, then I think we'll be cool. But I don't mind a flat open as long as we can develop something early. What's up, guys? How you doing? Sean, Dale, Keith, what's up, guys? Good morning. Welcome back. Trick Biscuit, how you doing? You know, I cannot believe that, what was it, a week and a half ago maybe? I'm sorry, it was last Wednesday, so a week ago, today. Not even a full week's worth of trading. After hours last Wednesday, we peaked above 20K. That's crazy, and here we are sitting in the low 17s. John, what's up? Good morning. Pops, what's up? But again, I mean, listen, I know you guys, when you're looking at your long-term stuff, you're probably not feeling too good about it. You're here, which tells me you're an active trader. Whether it's your primary thing or if it's like a side hustle, doesn't matter. If you're an active trader at all, volatility's good. The short-term big volatility and the long-term stuff, does it really matter? The short-term volatility lets you what? Generate more revenue to drive into the long-term stuff, which chances are, given a long enough time horizon, will win anyway. So wouldn't you rather have more at cheaper prices? You just can't panic. Hey Jim, good morning. Scooby, welcome back. How you doing? Rufio, good morning. It's good to see the same names in here every day. Recognize damn near every one of you. I think I do recognize every single one of you. What's up? Scrumptious, what's up? Skeeto, good morning, welcome back. Peter, Chris, welcome back. Crypto, what's up? Jude, Steam, Starbuck, how you doing? Good morning. Liberty, good morning, how you doing? Rightish, Joseph, what's up, guys? It's good to see you all. All right, we are just about 3 minutes out here from the market. A couple of bars to really develop, and then we'll start hitting it. I'm loving this volatility lately. Now remember, guys, if you are somebody who trades tight, like tight stops, tight take profits, more of a micro scalping mentality all the time, which I love and respect, you got to remember that when volatility, when ATR is higher than you're used to, like double, maybe triple, can't be afraid to size down and widen out your ratios. What I mean by ratio is, let's say maybe you, on average, you take, I don't know, 10 contracts with a 10-point stop and a 5 to 10 point take profit. maybe you size down to 5 contracts and double that stop, double the take profit. Okay, you end up with the same dollar amount, but not only do you save on commissions, which is a benefit of high volatility, you end up paying less in commissions, you usually end up making more money for a variety of reasons. But you can't be afraid to do that. You want to avoid chop to the best of your ability. Not only does chop take your money, really with not a lot of edge if you're trading inside a chop and getting chopped out, it's really hard to have edge when you're just getting chopped out. Usually it means you're trading too tight. Not only that, but it's very frustrating. Alright guys, let me know if you have continued issues here. Everything's good on my end as far as audio, video, internet. Alright, we are 60 seconds out here from the opening bell. Let's see what we get. Alright, good. Thanks, guys. Sometimes early in the stream, YouTube has to work it out a little bit, and then it's usually good for the rest of the day. Alright, we are sitting pretty much flat here, coming into the open. Opening bell 15 seconds out. Let's give you this look for the bell. We are looking at NQ right now, the futures contract. There is the opening bell. Let's see what we get in terms of volatility. Yeah, Christopher, appreciate you. Listen, guys, if you haven't yet, please get it out of the way. Press like on the stream. Helps out a ton. Really, it does. I know I say this a lot, but like a few people like the stream, and I notice. So I appreciate you guys doing so. That's all I ask. Gonna give this market a couple of minutes. We're sitting around break even. Now, we've been seeing for the last like 2 weeks, regardless of volatility, by the way, we've seen both extremes on the spectrum in terms of volatility the last 2 weeks. Very low and then extremely high, right? For whatever reason, we've been seeing, I would say, more interest around the break-even point on the day than is typical, at least in the Nasdaq. So here we are sitting around break-even. I expect we're gonna have to make a decision here. It might take a second. I hope we just make a decision and move. But it's not uncommon here the last few, I'll say last couple of weeks, honestly, not even just a few days, last couple of weeks. We tend to spend some time around this break-even point, and I find it a little difficult to trade around the break-even point if that's kind of all you have. So we're inside of this range right now. Again, going to give this market a couple of minutes, hopefully pull away from the break-even point, start putting in a either trend formation, like a sequence, or a nice channel that we can scalp. Either way, I'm cool. Just got to let it work itself out here. There we go. Nice push through 17.3. Morning, Eric. What's up? How you doing? Welcome back. There we are. Getting a nice push up through that little wick high we were seeing. Panther, what's up? Good morning. So again, if you're just joining us here, as far as news today, we have crude oil inventories at 9:30 Central. It's about an hour from now. Fed's Barkin is speaking at 10. That's not too big of a deal unless they mention tariffs again. And then remember, FOMC meeting minutes, 1 o'clock. Okay, that's Central Time. Okay, adjust for your time zone. The meeting minutes, I'm not going to be in a trade when those hit, but the volatility tends to pass within 15 minutes tops. Then we have Trump signing executive orders at 1:30. So a relatively open morning. I'll be watching basically 9:30, 1:30. Are kind of the checkpoints to watch out for. That's pretty much it, though. Aside from that, we are free to trade as we please. Huge couple of days, though, tomorrow and Friday. CPI and then PPI. Tomorrow being CPI, by the way. That hits 1 hour before the bell, wherever you live. And CPI, a lot of people like to try to pass Apex evals on CPI. Not that I think it's the best. Not that I think it's the best way to do it, but it can be effective if you're right. Oh, we're getting a headline here. It says traders now see June, not May, as the likely start for Fed rate cuts. So that's worth mentioning here. Okay, let's see if we end up putting in maybe a little ascending channel. It's still very early to say. Just two bars after the bell. Joseph, ever find yourself doing ES2 or NQ setups plenty? If the time that I might trade ES is if NQ volatility is like unmanageable, where the spreads get a little crazy, even though in futures that's almost never a problem because there's so much liquidity in this market. But you know what? For me, this isn't the stock market, right? Where you have to focus on like what's in play to really have any kind of edge. In futures, I really think focusing on one product is probably beneficial. Now, if you're somebody who like all you do is trade futures and you trade them for 12 hours a day, you're probably going to trade multiple products. But for 99% of us, one product is plenty. Brian, Pumple, what's up? Fly, good morning. Headline from Trump. He says, be cool. Everything is going to work out well. The USA will be bigger and better than ever before. Jay, good morning. Let's let this thing work out here. Let's see what we can get. Again, I'm interested right now. Again, it's the early stages, but when I look at this 2-minute chart, really I'm thinking, okay, well, let's see if we put in an ascending channel, maybe 100, 150 points wide, and I'll scalp that thing until it breaks. Look at the 5-minute here. All these wicks, by the way, on the 5-minute, these are all kind of overnight, early morning wicks. There will be stops in this region, but not nearly as much as if those were put in while the market was, I should say, New York session was open. So, worth mentioning. Yeah, Steam, you know what? As far as futures are concerned, I'd have to agree with you. And I'm not married to the Nasdaq by any means. It just happens right now, in my opinion, to probably be the best scalping product available for futures traders. Now, that did not used to be the case. Again, 15, even just 10 years ago, but like especially like 15, 20 years ago, when futures trading was really hitting the internet to begin with, like the OGs all traded ES because that was the thing to trade. There just wasn't really enough liquidity to like day trade other stuff, at least not well. Now, that has slowly shifted, and I think now, like 20 years from now, people are going to be saying, oh yeah, the OGs used to trade NQ. And maybe NQ will still be the product. Probably. Who knows? Or it'll have shifted to something else by then. But that doesn't mean that one is the right answer, okay? I just like NQ because when you run the numbers, it tends to see bigger percentage moves for the equal ES move, if that makes sense. Now, what that means is you end up saving in the long term on commissions. So it's like, well, if you had to pick one or the other, if you can't deal with the choppiness or the volatility of NQ and you like the more calm environment, then trade ES. But I don't find NQ to be so crazy all the time. And I like that, you know, you get more follow through, you get more action, you usually get more setups, and you save on commissions, which is just a benefit. Nice. Did you start out as a scalper from the very beginning, or did you transition to it eventually? You know, I don't know where I originally saw scalping, or if it was like something that I thought about and then I was confirmed, oh, this is something that people do. I can't remember that part. But like scalping from the very beginning, for whatever reason, was just like, yeah, that's what I'm gonna do. Because that matched my personality type, still does to this day. Obviously, I went through a lot of periods where maybe I was scalping less, but it's always kind of been the core. You know, for example, there was a period where my now wife and I paid all of our bills for the better part of maybe 12 to 18 months. I didn't have enough money to actually actively scalp. And at the time, I was just trading stocks and options. And I paid all of our bills with trading options, spreads, and net short strategies. Because I wasn't above PDT, so I had to do what I could. Which, by the way, PDT's gotta be wiped from this planet before I die. Maybe we could all get together and try to make that happen. Because I gotta tell you, whoever's in charge, I don't think gives a shit. I don't even think they think about it. Look at this push. All right, we're coming into 840. So, okay, as this develops, here's kind of what I'm watching. Either we see, now it's becoming aggressive, an ascending channel, or you could draw it this way, right? Most people would probably draw it this way. These are pre-market levels though, and then this way. So I'm watching that. Otherwise, if we see a breakout to the upside, then I'm paying attention to that. Again, continuation, channel scalping, I don't care. Just trade what the market gives you. There was an article, Pumple says, there was this article I read when I started initially saying that scalpers are generally less profitable and more likely to blow their accounts eventually, which I guess is somewhat true. You know, the problem with almost every single, and by the way, I'm watching this for continuation, but I'd prefer to take the third bar, so we'll see. The problem with all these articles about day trading is two things. The people writing the articles are rarely traders themselves, and they're going off of data. But the problem is that all the data is skewed because so many people try to day trade, and very few actually take it seriously. I mean, if you think about it, right, when we say day traders, like you read an article that says like, okay, 96% of day traders lose money, and everyone goes, oh my God, it's a scam, they're gamblers. It's like, okay, 90% of day traders open a Robinhood account and look at their phone and they swipe up because they're like, yeah, that's gonna go up. Or they look at some CNBC guy who's like trying to pump his own portfolio and they're like, I'm gonna day trade that stock. Meanwhile, he's looking 6 months out. They include those people because technically they're day traders. You can't just like conveniently leave them out. So guess what? Now all the data's skewed. and it looks like shit. In reality, probably 98, 99% of day traders lose money, and everyone gets scared when I say that. But you have to remember, 90 to 95% of those people don't care. They're just trying to make a quick buck. They're not actually trying to be day traders. Believe it or not, I know for all you guys in this stream, you find this hard to believe. Believe it or not, there's a lot of people on this planet that have no desire to do this, to stare at charts all day. All right, so we're seeing weakening bull activity here on the 2-minute chart. Let's look up top. Bears attempting that reversal. This is why I have to give it three bars off the open like this when we're trying to break out. So you're saying there's a chance. Oh, well, listen, the beautiful thing about day trading is, how do I explain this? If you want to be Mr. Olympia, you have to be born with a certain genetic code. That's just the reality. If you want to be able to maintain the fullness at the body fat percentage necessary to be on stage and win the trophy, you're going to have top 0.1%, probably top 0.01% genetics, and then recognize that and then dedicate your whole life to doing that. That's how you end up with Ronnie Coleman and Chris Bumstead. Okay, they had it, they recognized it, and they decided, okay, I'm going to dedicate my life and push the limits, and you end up with like this one guy. That's not day trading. The thing about day trading, the beautiful thing about this is most people fail miserably, 100%. But it's all up to whether or not you give enough of a shit to keep going. Do you care enough about this, or do you just want to make a quick buck? Or do you love trading enough that you're like, I don't care what happens, but I'm going to keep pushing? It's all up to you, really, because you really just, you don't have to be born with anything. It helps to be able to think quickly, but really all you have to do is keep going and keep trying to get better and keep pushing the limits. You don't really have to have you don't have to be a genetic anomaly. It's all up to you whether or not you keep going, which is the beauty of this. That is not the case for a lot of other top performing niches. Usually you have to be special in some kind of way. Here, it helps to be smart. It helps to be a quick thinker. It helps to be good on a computer naturally. But you can just develop all that. It doesn't really matter. Bear is trying to take this back downside and succeeding, looking more and more like an ascending channel. We'll see. Yo, Nigo just passed my eval in the first 15 minutes of market open. I'm done for the day, but I'll be watching the stream. Good work. I'm really just watching this ascending channel here. Well, we're coming into the time. We're well past 8:45 now. This is the time when I often will take my first trade, but I need the market to give me something. So as we come in now here on this third consecutive bear bar, if we see a big downside push, here, I'll show you this look. If we see a big downside push through this level, that breaks this ascending support, and then I'm looking for continuation. But it's also very possible, about 50-50, that as we come into this test here, we end up holding this ascending support. So I have to see how that develops. Chris, this happens to be the 20 EMA, though when people ask that and I tell them, I don't want you to take it as this is like some secret or the magic weapon or I trade off of this on its own. I just throw it up there for context, and I use the 20 because I think it's one of the most common for day traders, which is what I care about. Just use it for context, that's it. A supporting factor in an already good trade. You guys see this now, right? You have weakening bull bars on this push upside. Reversal attempt, weakening bear bars on this push downside, reversal attempt. This is the beginning of a potential ascending channel. We'll see if that can hold. This would be the third touch point to the downside, but I gotta be honest, this one back here would be number one. That was before the bell. I'll let it slide if we get a nice push up out of this hole. And then look to take scalps off the bottom. Go ahead and get my copy trader all loaded up, ready to go. Here we go. So, I saw some people over the last couple of days were having some issues, by the way, with getting, for context, take profit trader is always very fast with their payouts. You request the payout, they usually approve it, and it's like in your account. The last couple of days, I've seen some people like freaking out because it hasn't. I think they were really backed up. My approval, I think yesterday morning. I put one in maybe 2 days ago, and it took maybe 12, 18 hours, which is a little longer than normal, putting it in during especially business hours. Mine's out. So I've seen some people still is pending. Listen, again, I don't know for sure, obviously, but I wouldn't worry about it. I think they were just really backed up from that crazy, crazy day. Are you currently trading on prop? Yes, I'm trading on, how many? 9. I'm trading 9 prop accounts, 7 funded Apex accounts, 2 Take Profit Pro accounts currently. All right, well, here we are getting an attempt at a push out of this hole. I want to see a little bit more follow through, and then we've satisfied kind of that third touch point requirement. So I am interested in little channel scalps on new downside tests. Might as well draw this. Would you agree if a trading strategy works on a 4-hour chart, it also work on a 5-minute? So this is something that I think people ask a lot. My personal opinion on this is the shorter time frame you go, the same setups that work on average will work. You'll get more of them, but the edge will start to go down per trade. Okay, now think about it, right? If a casino deals you one hand of blackjack a year, they wouldn't do that because they have a tiny little bit of edge on one hand of blackjack. And they're not going to gamble their whole year on like a 49% probability that they just lose the whole year. 48, whatever. So if you're going to take a small amount of trades, like on a daily chart, if you wait for 2 setups a year, you're going to want to have a ton of edge. Now, if you wait for those same setups on like a 10-second chart, you're going to get a hell of a lot more setups, but the edge is going to go down. But with the bigger sample size, since you're taking so many more trades, you'll make probably the same amount, if not more, money on that smaller edge, which is why Vegas tries to deal you so many hands of blackjack so fast. You know, they say you can't, I think people like to compare trading to gambling. However, it's the literal opposite. We're on the other side, right? So if you sit down at a casino, at the blackjack table, people say, oh, you can't beat the casino. No, you can beat the casino if you play 2 hands and walk away and never come back. Small sample size, because you don't have edge. You have negative expected value. You can beat the casino. The longer you play, though, that becomes a certainty that you will not. With trading, if you have edge, you're now on the other side of the table. You're now dealing the cards. So you should sit and take as many setups with edge as you possibly can if your goal is to make as much money as possible. But the kicker is you have to have a statistical edge. If you have negative expected value, you go back to being the gambler. Okay, so if you're a profitable trader with edge, if someone says you're gambling, you're literally doing the opposite. Is the casino gambling? I guess they're partaking in gambling, but they're dealing the cards. No one would say that, oh, a casino is gambling. They're not going to make any money. Come on. So I'm watching this ascending channel here. For obvious reasons. I'm looking to take a little scalp if we can get a nice controlled downside test of that. Yeah, today I'm gonna go my regular, as of late, 40-point ratio here. 40-point stop. Initial 40-point take profit. We'll adjust the take profit if absolutely necessary, but preferably not. Bit of a potential flat top here forming on the 2-minute. See this? It's a great setup. If you can get it to follow through and give me an entry. When you get like a flat top, or if you invert this whole setup, you get a flat bottom and a descending resistance. In this case, you have a flat top and an ascending potential support lining up with the 20 EMA. Right now on this bar, obviously it creeps up with each rollover, but on this bar, a downside test of about 17,360 for me is an entry every single time, long. And then I can get out. I mean, Obviously, volatility, this is kind of a wide range. It's wider than it looks. I get out way before a test of that flat top, which, by the way, flat tops are notoriously, and flat bottoms, inside of a wedge especially, notoriously weak. Tend to break. Okay, here we go. A controlled move down toward 375 would be an entry for me here. Long. Joseph, weak as in a breakout? Weak as in probabilities weigh in the ascending or descending support or resistance, respectively, favor. So we're talking like 55-45, percentage-wise. So when you see a wedge, like with an ascending support and a flat top, in my experience, I would estimate there's probably about a 45% probability that the ascending support breaks on any given test, and there's a 55% probability that the flat top breaks on any given test. And that tends to get stronger the more the channel develops. Okay, so again, crude oil comes out in 30 minutes. So we'll see this 9 o'clock rollover here in 10 seconds, how that reacts. See if we get any algos triggering. You algos? Kind of testing that flat top there. Which I'm fine with for as far as continuation setups, but I'd honestly prefer right now, just for the sake of getting my first trade in, a downside test. That setup's closer right now. Well, there's the break of the flat. So you know what I'm watching now, right? I'm looking for if we can get a continuation sequence. I don't want to give the bears any reason to believe that we are forming any kind of resistance here. So a nice push through on this bar if we could get a nice sizable bull bar. Not too big, controlled, but sizable bull bar. Closing near the high. Yep, about 55% probability that were to occur. In my experience, at least. Flat top break. You don't need a lot of edge. You're not going to find a lot of edge, by the way. The futures market is very, very efficient. So if someone's telling you that they win every trade, or they're telling you numbers that add up to a ridiculous edge, you know something's not right. You really, I mean, look, Vegas was built on a 1 to 2% edge. Obviously, their sample size is massive, so as traders, we're probably going to have a slightly larger edge than that, because our sample size isn't nearly as big as far as, like, cards, hands dealt, right, and trades taken. But you don't need some 80% edge or something crazy. I think when I start talking about edge, a lot of people, their eyes glaze over. If you want to be a trader, that's what's going to pay your bills, so get used to talking about it. There we go. Update that line. All right, now kind of looking for if we can get a downside test of like 17,420-ish. That'd be an entry for me here. Getting a nice little push. I need at least about 30 more points to the downside to give me an entry here. Bar rolls over in a few seconds. And I will. I'll get long there on that downside test of that channel with the 20 EMA. Stop down at 17,388.50. Take profit up at 17,468.50. Currently sitting a few points in the money. Just a little channel reversion scalp here. See if that works out. Obviously, volatility is kind of high. We're pushing that stop. And there we are. Chopped out. Not chopped, really. Just a loser there. Start off the day. Kind of reminded me of yesterday, huh? Start off the day 1 hour down. See if this channel now holds. Okay, so we're down 1 hour currently, which is going to be... Actually, we got decent fills, so we're down like 1386 currently. Whereas a typical winner is like 1500. So let's see what else we can grab here. Here's a look on that 2 minute. Now I'm kind of thinking continuation if we can get continued pushes. But again, I need to see really a third bar. This one here rolls over in about 45 seconds. And we're kind of hanging up around that 20 EMA. If you look at the 5 minute here. About 100 points of room between now and there on the 5 minute. Still struggling though with the 20 on the 2. right, this bar is important here for me. If this bar gives us a nice, sizable, but controlled, similar size to the previous two bear bar closing at or very near the low, that turns into a continuation setup for me. But just take what the market gives me. There's the retest, that trend line. Very common to see that, by the way. When you get breaks downside through a trend line like that, you very, very often get a push upside on a retest. Same goes for if it's inverted as well, with a resistance level breaking. All right, we are 35 seconds out from the close of this 2-minute bar. It's not looking like I'm going to get a setup here, so we'll just hang out. Bull's trying to attempt this a little bit higher. Again, this is very common to see. You see that retest after a push down. Rufio just passed 750k Apex evals in 10 minutes. That is crazy. Good work. All right, Bull's trying to kind of reset this channel, but again, currently seeing that retest of the trend line, they have to pop through there first. There's nothing for me here at this very moment. I need to see either a reset of the channel and then scalp the channel again, or ideally I'd love to see continuation downside and then take a continuation sequence. All right, well, while this works itself out, I'm going to grab coffee. 2 minutes. All right, yeah, you guys see that flat bottom there here on the 2-minute? Those tend to break, so we'll see if we can get some kind of continuation sequence here. By the way, the reason I don't enter for the break of those early is that it's a different trade, right? You're looking at a low probability, higher reward to risk, but a high probability of getting chopped around, because who knows if it's going to break on this test or the next test or the test after that. So I prefer to let it break and then look for a higher probability continuation sequence. See if I can pick an entry up down there. I am interested in this bar, by the way. Some stops in this region here. That is after the open. Some more stops down there, though I wouldn't need to get down that far. 55 seconds until this bar closes. I am watching, by the way, the 5-minute. That 20 EMA is currently sitting right above 17.3. Bull's taking this a little higher. All right, here comes the roll over here. This bar, 5 seconds. Not going to be an entry there. You see we wicked right back up to the flat bottom. It's very common. Ah, it's hot. A little bit of indecisiveness here out of the market right now. We're going red, green, green, red, red, green. Every time you get a look at a potential continuation, you start getting a lot of back and forth and a lot of weakness in either direction, by the way. So I'm also keeping an eye on this potential for a descending channel, though kind of right around that 20 EMA on the 2-minute, it starts to get a little bit weird. Just a lot of times the market will give you a setup, it'll break, then you just wait until it develops something new. It always does. Got to give it a few minutes. Your trade recap videos are killer, man, by the way. Hey, appreciate it. Appreciate it. I hope they're helpful. Okay, so we're attempting to put in this descending. You guys see that? This descending channel here. Look at this 2-minute. I'm actually going to clean this up, delete that. We are going to see people, like it or not, looking at this. Okay, this is just the second touch point on the top end. I would call these back-to-back touch points kind of one touch point. And then you have 3, arguably 4, here on the bottom. With short-term trend, I'm more of a fan of scalping with the trend. So in a descending channel, the better trade for me is going to be a short off of the 3rd plus touch point of the descending resistance. Vice versa for an ascending channel, obviously a long off the ascending support is a better trade for me. What do you think of a 2x, 3x inverse ETF? I mean, it's a trading product. You want to trade that? I mean, fine. I think when you start launching into like leveraged ETFs and leveraged inverse ETFs, it almost, I mean, in a way, it almost just makes more sense to trade futures. You can short just as easily as you can go long. There's more liquidity. The spreads are less bad. There's no PDT rule. When you start launching into that world, it's kind of like a band-aid for not just trading futures, in my opinion. There's a time and place for an inverse ETF, but trading, probably not. I think you're probably just better off with futures. You're getting the same leverage, actually a lot more. Hey, Daniel, how you doing? Welcome. All right, still kind of on the second touch point here. Let's see if this channel actually qualifies. What would qualify a channel for you? The 3 touch points. Like a descending channel, 3 touch points on the descending resistance would qualify, even if there's only 2 on the bottom. But here we have 3 on the bottom already. All right, there's an attempt at a breakup. By the way, breaks of channels are fine. Oftentimes lead to a continuation sequence for me. So I really don't care what it does here as long as it gives me a setup. Pumple, do you ever take trades off support resistance? Well, I mean, a channel, that's exactly what I'm doing. But if you mean like daily levels, honestly, no. I usually, if I'm going to trade a level that's flat, this is a really easy rule of thumb. If I'm taking trades on levels that are horizontal, flat levels, like opens, closes, flat tops, flat bottoms, I'm usually betting against them. And I'm either entering a wedge, looking for a break through that flat, or I'm entering with a stop limit on the break of that flat. I've just noticed in the futures market, flat levels are lower probability than like descending resistance and ascending support. That's just my experience, but I think that's probably a lot of people's experience. Alright, attempting this channel again. Listen guys, hey, if you haven't already, please press like on the stream. Helps out tremendously. I appreciate you doing that. What about supply demand? Do you take those into consideration? Just as far as price action is concerned, sure. But in the way that I think you mean, not really. Alright, so I would call that, it was sloppy, but I would call that a respect. I mean, on the second test of that channel, you get a wick higher and then it fails. Disappoints the bulls, right? I've asked you like 100 trading related questions. I feel like I should ask you about something else. So, how much do you bench? A lot, Jacob. If you understand that reference, we can be cool. The bulls really don't want to see this channel hold. So, you know, oftentimes you can see attempts at descending channels turn into attempts at ascending channels. But I need that third touch point on the either descending resistance or ascending support or a breakout and a continuation sequence. Listen, a lot can change. You guys see, we can go from having basically no setup on the table to having a trade on in 4 to 6 minutes. So it's really boring until it's not. All right, here we go. There's 17.5. That's going to be a tier 2 level. Matt, joining late. How we doing? Well, welcome. Me, I am repeating yesterday here. So yesterday, first trade of the day was a loser, and then I came back and had 2 winners and was up, finished the day up 1R. I'm currently sitting down 1R. Red on the day. Which I don't care about saying that out loud. I think Eric's the only one who got the reference. Let's see if we can put... You guys see, we're getting this retest. Look at the 2-minute. We're getting the retest here of that descending, what was previously an attempt at resistance, and now the 20 EMA. So this could very easily turn into an ascending channel. But when you get these little, like, back and forth attempts with 1 to 2 touch points each time, for me, it's just not good enough. I need to see at least 3. Chris, I have a feeling we were going to be trading sideways today. You know what? And if we do, that's perfectly fine. I'll channel scalp. I just need some kind of decisiveness here in order to do so. Crude oil hitting in, 3 minutes. Expect about 30 to 60 seconds of volatility. That's really about it. Jimmy, does your Apex code have a 90% off flash sale today? I've heard rumors that other codes are temporarily 90% off. Yeah, I've seen that rumor floating around too. I have heard nothing. If you type it in and see, I don't know. I couldn't tell you about my code. I haven't received any heads up from Apex about something like that. I don't. Every once in a while, it's rare, but every once in a while, somebody will do like a flash deal directly with Apex, but it's usually only for like an hour. I have heard nothing about that today, though. Michael, yes, FOMC minutes at 1 p.m. Central. So that'll be the most volatility we'll see here today. We also have Trump signing some documents at 1:30 Central, so we'll see. Again, still sitting on that retest. I gotta tell you, I'm actually inside of this channel, not against a continuation sequence if we can break down beneath this wick. If I could get an entry down around here for a push downside, I have plenty of room for continuation scalp before hitting the retest of this descending channel. But we'd have to break this potential of an ascending channel. I really don't like to make my charts messy, but just for visual, we have to break that. If we can break that, then I'm looking at continuation. I'll leave that on for now. I don't like to draw too many lines. Actually, I'll tell you what, I'll delete this. Okay, 60 seconds out from the rollover of this 2-minute bar. Does have me interested. Only if we can get a nice low close at the low of the bar below that level we just drew. What is Trump signing? I just saw generic executive orders, so we'll see if we get any tariff news out of that. And that's 130 Central. We are really coming in. I mean, look at this. This is where it starts to get a little bit weird, and I really would just prefer to see a breakout to save myself the trouble of having to deal with all this. I mean, we're starting to get this. We could honestly probably delete this, but I want to leave it on. We're starting to get this weird little, and these always break, one direction or the other. But which direction it breaks is 50-50. So I let it break, and then I watch for a continuation sequence. And then I trade that. Now I'll leave that for now, even though it looks ridiculous. Just for your guys' context. "30 seconds out here from the close of this 2-minute. Let's see if this breaks. Okay, we are getting a push up through 17.5, tier 2 level. 15 seconds out here from the close of this 2-minute. And when we see the rollover, maybe on this bar, we're probably going to see a retest of that trend line. And then the next bar becomes important to me. Well, there's the retest of the trend line. Okay, now if this bar here closes above the previous wick, a nice sizable bull bar, but not, controlled still, not some massive news bar, that becomes a continuation entry for me. And I would buy the rollover of that in 1 minute and 40 seconds from now if that occurs. ATR, by the way, is up at 90 currently. Okay. 1 minute and 10 out from the close of this bar. If we could just stay right here. Don't move too much. That becomes an entry for me. Alright, I don't want to see this thing grow too much more. "40 seconds. See that? Pulling back to the wick of the previous bar. That's kind of a no-no for an entry for me if we close this way, but I gotta see. We sometimes get a last-second push upside through, and then I do. Or I will have to. Bear's holding on to that previous wick. Here comes the rollover. No trade, hands off. Gotta see how this next candle develops. Starbuck, did you ever channel trade regular stocks? And if so, what kinds do you trade? Beginning to think I might be more of a channel trader than a scalper. So I assume you mean like wide intraday channels, more like a day trading mentality, not really a scalping mentality. I've tried, I mean, this is just the truth. I've tried pretty much everything. I tried to scalp EMAs on blue chips. I tried to scalp only EMAs on ETFs. I tried channel trading blue chip stocks. For stocks, I found what most other people who have found some kind of consistency will tell you, for regular stocks, I have found that if you're not trading what's in play, quote unquote, it's really, really tough to find an edge. It's just really hard to find that opening. And you're even more kind of at mercy of individual news that's a little bit less known. Like, news on stocks hits randomly and it can just blow you out. But mostly it's the edge that we're talking about. Okay, hang on. We have 40 seconds left on this bar. If we can close above the wick of the previous bar, then I buy the rollover. For stocks, in my opinion, for me, the best stocks to trade are the in-play small cap momentum stocks that have few algorithms and a ton of human traders, because human traders can be beat a lot more easily. And think about it, when a news headline hits and a stock goes from 3 to 10, you know, everyone's like, well, is this thing worth $2 a share or 30? And you can find edge in that very, very well, very consistently. But like on Apple, there's the rollover, no trade. You guys see we got the close below the wick of the previous bar. Bull's not taking it higher, showing weakness. If you're trying to day trade Apple, you're gonna have a hell of a time because it's so efficiently priced. Whereas, you know, like futures are also efficiently priced, but it's a trading and a hedging product. Apple really isn't. It represents a company. So you're trying to trade this extremely efficiently priced product that's just based on a single company. Some people maybe make a living trading only Apple. I gotta be honest with you though, I have not personally heard of somebody who's like, yes, I've been trading for 15 years successfully and all I do is trade one stock every single day. I haven't heard of it. I've never seen it because I think it's just too hard. And we don't need to reinvent the wheel here. Right? This is already hard enough as it is. Just find where you can find edge the best. All I can do is tell you what I did and what worked the best for me, which is going to be a few things. Again, scalping, in play, small cap momentum stocks where it's mostly humans that you're competing against, mostly pre-market. Futures are a trading and a hedging product. It's somewhat difficult to find edge, but it can absolutely be done. Absolutely be done. Net short option strategies, whether that's sell to open, running the wheel, spreads, great as well. Like those three are my three favorite ways to trade. Joseph, I need to learn more about ATR. I get that it's true range, but how best to use it? You said it's up to about 90. I'm not 100% on what that means. Okay, so ATR currently is actually at 80. If you look up top, it's at 80. ATR, all this is the point range, the average point range of the last 10, in this case, 2-minute candles. So it's the average, volatility based on points of the last 10 2-minute bars. That's it. And then the range, which is the yellow flag at the bottom, is the range of the, in this case, the last bar, because I had my settings wrong. Because I had to redo my entire NinjaTrader the other day. But usually it's the running range of the current bar. Alright, well here we are now coming in for a test of that potential ascending channel level. Now, we have 3 touch points, but we also have this wedge coming down here, which we're now retesting, and we have the 20 EMA right there. So, do I get long off this? No, personally I can't. There's just too much in the way. But, if we can see a break downside through there and get a close, maybe down here on the next bar, since this one closes in 25 seconds. That's beautiful continuation to also look to hunt these stops at the same time. All right, a minute 35 out here, testing that trend line right now. Here, we'll extend this out so we can clearly see that break if we get it. A minute 15 from the close. If we can see a close down in this region, I will sell the rollover. But I don't want to give the bulls any hope that we're going to hold that trend line. I want that to be pretty clear. Minute out. $40 seconds here to clean up for me. See if we can get it. $20 seconds. Holding on here to this trend line on the 2. Well, I guess on all time frames, but look here. Comes the rollover. 5 seconds. Well, these tend to really tempt to break. See if we can get one. Bulls are going to try a little reversal sequence here. You see that big wick upside on that bottom bull bar? Sorry, bear bar. Right here. Now the bulls attempt their reversion sequence, and we'll see if they can pull that off. Again, the easier trade for me right now, the easier setup that would come more quickly would just be break downside, give me continuation sequence. Yeah, I'm thinking we probably see a break here. Again, it's not enough for me to trade it, but I want to get that continuation entry on the downside break if we can see that. A whole bunch of stops down there that I could also hunt at the same time. Bull's really struggling to get it up out of this hole. All right, here's an attempt at a break. Yeah, I'm a fan of the balance of the 2-minute. When I say balance, I mean quality of setups versus quantity of setups. You go to the 1-minute, you get a higher quantity, but the quality goes down. You go to the 5-minute, the quality goes way up, but the quantity goes way down. All right, we are 55 seconds out from the rollover of this bar. Bears just need to hold this break. Best setup for me right now possible would be a close right about here on this bar, rollover, and a close right about here. I would enter all day on that setup. Short, by the way. All right, 30 seconds out. Bulls really trying to hold this channel. They're not giving up, are they? Well, the Bulls are really holding on to this channel, so we'll see if we can get a channel setup going. Again, I don't care. I don't care if it gives me a channel setup or a continuation. As long as it gives me a good setup, one or the other. All right, I'll be back in 2 minutes. Don't go anywhere. All right, well, thank you for the heads up. Now I gotta wait for one more bar, because that's just a single. That's a big bar, but that on its own is not, that's not enough for me, because, you know, some of you guys might not be seeing. See that? right into the 20 on the 5, which is looked at enough to consider here. So gotta pay attention to that. However, a moderate-sized bear bar closing at the low here in the next minute and 15 seconds when it rolls over, that would be short continuation for me. To the bottom of this wick. And I will actually just go ahead and clean this. I mean, this likely, nah, that's not going to be an issue. All right, 45 seconds out from the close of this 2-minute bar. Let's see if we can get an entry. Seconds. "15 seconds is a big bar, but it looks good. All right, 8 seconds. See if I can sell the rollover here, and I will. I will get short on that rollover. Sitting about break even on the trade right now. Stop up at 17,351.50. Take profit down at 17,271.50. 20 points in the money, 30 points in the money. Downside push, give me a little bit extra. Target down at 271.50, and we are out there for a winner. Okay, that was quick. Copy trader left me in on 1, but it's all right. We only took like a $20 hit on that one account. So we are now sitting, well, I mean, pretty much break even, okay? Are we flat? All right, we are flat. We're sitting pretty much break even now on the day. So 1 loser to start the day, one winner. Again, copy trader, it was this account, this Apex. Can you see my mouse? Yeah. That one left us in on... Well, it was actually a ghost position. I gotta fix this in this. This copier actually has a feature to protect you against ghost positions in Ninja. What happens is it says you're still in a position, even though you're not. So when you try to close it out, it flips you the opposite direction and then you lose the spread, and there's no other way to do it. So you unfortunately end up losing the spread, plus a little bit usually. So that was where this little hit came from, but you can see the total. We're break even essentially on the day. So let's see what else we can grab here. That was quick. How many micros you doing per trade? Depends on the account. In a few of the accounts, I'm trading. In 4 of the Apexes, I'm just trading 1. In 2 of the Apexes, I'm trading 3. Sorry, in 5 of the Apexes, I'm trading 1. 2 of them, I'm trading 3. Take Profit Pros, I'm trading 4. I prefer to try to scale this horizontally, not vertically. Which means keep the size small per account, and then just over time scale the accounts. And don't get married to the accounts, by the way. If you blow a funded account within a reasonable amount of time, like multiple weeks, multiple months, I think that's fine. You should be, if you're holding on to funded accounts for, 10 years, you're probably not trading aggressively enough because, I mean, to get to the max payouts, which is really the ultimate goal. But if you're blowing accounts every day, like most people do, then you're also not getting to payouts. It's a balance. I think to peak out that bell curve, you want to be somewhere in the middle, which is why I say that number 2 of your business plan for prop trading. Number one is how much you're going to invest quarterly or monthly into prop trading. Number two should be how long do you want to hold on to the average account, which determines how aggressive you are in sizing. That's the only reason that we need to determine that, because then you figure out your size. And then over time, you figure out, okay, how much size do I trade that on average causes me to eventually hit a losing streak where I blow the account once every month, 3 months, 6 months, whatever you put in your business plan, right? How aggressive you should be. And then part three of that business plan for prop trading should be, what's my revenue goal, my revenue generation goal or ROI on that monthly or quarterly investment. And this is all averages, right? It's not going to be the same every single month or quarter, but it should average out over time. Literally takes 3 minutes to write that out, and most people won't do it. Justin, I keep getting to within 1K of passing an eval and can't get over the hump. Any advice? Well, it sounds like if you're getting within 1K, it sounds like this may be an emotional issue. And I wonder, are you holding those last couple trades and praying and then getting clipped out by the trailing drawdown because oh, I'm 800 bucks away. I'm 1,200 bucks away. Just one trade. Let's just get it done. Just trade consistently through the eval. I think over time, honestly, just to be straight up with you guys, most people over time will start getting less and less strict in the evals, because if you're doing this for a full-time or part-time income, you don't want to spend all day in the evals. And if you're making money on it and you're profitable, even investing more into evals, it doesn't matter. You know what I mean? If your success rate on evals isn't like necessarily 100%, it just won't matter anymore. And it'll actually make less sense to spend 2 weeks in the eval. But in the early days, you should try to get to funded for as cheap as possible while you're still figuring out your risk management. So I guess my input on that would be trade small and try to find the setups that work for you. And then if you need to, hide your P&L and just take good trades. Check in once in a while. Same idea. All right, here we are taking out those recent lows. We're 50 seconds out here from the rollover of this 2 minute, though this is kind of the first bar in this sequence. So regardless, I'm going to let this bar roll over and then we'll take a look. Yeah, listen guys, if you need to hide your P&L, I've done this, by the way. There's no shame in doing this. Today, it's just right in front of me. It doesn't bother me. But that's not something you can train yourself. That's just a byproduct of being red, being green, being break even, a lot of different trading days. And you just don't care as much anymore about where you currently sit because you have more confidence in your mid to long-term performance. If you need to, I have done this, take a black Post-it note, rip it in half if you need to make it smaller, cover your P&L. Don't try to peek around, just cover it. Take good trades, and when you're done for the day, you can either leave it on for a week straight, or when you're done for the day, I would usually take a peek and see, okay, where am I? Oh, I'm green, good. Just take one good trade at a time. I know it's hard. I know self-control. The money's like, that's why I'm doing this. I need to know where I sit. Do you? You need to take good trades is what you need to do. The money will come if you just do that. Will the market ever recover? Well, we don't have, I know people will say we do, we don't. We don't have 5,000 years of data on the US stock market. However, I would not bet against us. So, my opinion would be, of course it will. And if it doesn't, we have bigger problems than the market not recovering. Just waiting for a little sequence here. King, so you're asking, having a small personal account that trades one contract per trade, fixed stop loss of $50 per trade, which would be better suited, the MES or the MNQ? So as far as getting chopped, you'd be at a higher risk, probably an MNQ, since the percentage moves given an equal move across the two tend to be bigger. However, that would give you 25 points of room trading one MNQ contract if you want to risk $50 per trade. 25 in this market, like for me today, that would be a little tight. But in most cases, a 25 point stop on MNQ is entirely reasonable. If it were me, I'd probably go that way. But again, there's no right answer here. So this is actually really common. You end up seeing this downside move and then you kind of go a little bit of relief as the bulls step in. A few sellers step out. It still feels heavy, right? But you start widening out into this widening potential descending channel. And that's what we're seeing now. We're seeing this upside test. There's really only one touch point so far, so we'll see if that maintains or if the bulls can take it higher. Either way, it looks like the bulls are going to try to break this out. Either way, again, I don't care. Just give me a setup. Coming into the 20 here on the 2. You guys can see here on the 5 as well. Same deal. Coming right into the 20 on the 5. They're lining up together. So I'm paying attention to that. But if we can see a break upside through here with another bull bar closing near its high, all of a sudden, guess what? Continuation back upside is back on the table. All right, a minute 15 out from the close of this bar here. Now, worth considering, guys. This is an aggressive trend line, yeah. But I know some traders are going to be looking at that. So if we could get a very clear break, then boom, buy the rollover. Is what I would do. I'll leave that for now. First day funded with a new company. 500 bucks locked in for the day. Scalping has been my best bet. Just got to cut losers like I did today. Yeah, listen, if you're going to be a scalper, you cannot afford to be moving stop losses, canceling stop losses. I know it's hard. I know that emotionally, everything in you sometimes is like, if I just cancel this, it'll come back and be a winner. I'm telling you, your edge is slim as a scalper. Eventually, when you move a stop loss, maybe even today, it's not going to work. And all of a sudden, you just demolished your edge. It's not worth it, I'm telling you. There is no loss as a scalp trader that you cannot, at least should not be, that you cannot quickly come back from. Remember that. That's kind of the point. The losses stay small. Yeah, you know what, Doug? A lot of times it will work out. But if that's not part of your plan and you're doing it out of emotion, the blow-up is gonna come. Right? I know it's tempting, but the blow-up is going to come if you're going against the plan and moving stop losses, completely taking them off, averaging in when that wasn't your plan, right? Now, if you're scalping around a swing, it's a little bit different because you have a disciplined action set. But most people aren't doing that. They're just moving their stop loss, and then they're like, well, now, you know, I was risking 30 points, and now I'm red 70 points. I can't cut it now. Let me just wait until it gets back to my original stop, and all of a sudden you're down 200 points. It just takes one. I'm telling you, it's not worth it. Taking a little paper cut now is a hell of a lot easier than getting sliced in half. Just seeing if the bulls can break this out here. Again, if you're just joining us, I am 2 trades in, sitting break even on the day, pretty much. That's how we sit. That's break even. Kind of a similar thing happened yesterday. I ended up locking up a base hit green day, but we'll see what we can do here. Well, bulls are working hard to push out of this. They're not quite succeeding yet, though. We'll see if they can. And listen, you know, I don't get paid for this. I'm telling you this because it's a good tip. This copier that I'm testing happens to be, you guys actually told me about this. This is by Affordable Indicators. It has a feature in the, I think it's in the risk manager, that can stop you from moving your stop losses. Once the stop is out, it doesn't let you change it. It's called like the exit shield or something. Some of you guys, that might be just what you need. I remember years ago wishing something like that existed. Of course, it doesn't in most regular brokers. I have the hardest time with taking profit at a stop when I know it will go further. I have the hardest time taking profit at a stop. I don't think I know what you mean. I mean, as you're moving your stop up to trail. And by the way, you never know it'll go further. You just think it's a higher probability than not. When you start using terms like, I know it will do this, you're in trouble. Well, we're getting the retest here on the 2-minute. You see that? You get the attempted break through the trend line, retest of the trend line, and the 20 EMA in this case. Very, very common to see. You can expect that probably 80% of the time you see a trend line break. Developing a small little flat top here. Let's see if the bulls can break that out. Hard back test here of the trend line. Bulls are going to try to hold that. Let's see if they can. If they don't, if they give it up, we could have a nice little amount of room here for a little bear sequence. Close, close, sell short. That would be what I'd be looking for. I'm looking for really the same thing on both sides of the ball right now. This, by the way, is the 20 on the 5-minute. Bulls trying to hold that. We'll see if they can. How to emotionally deal with going from 25K to 2 million and then back to 25K all in 6 months' time. So that's obviously quite one hell of a ride. I think most people don't believe what I'm about to say, but the reality is you went from 25K to 2 million and then back in 6 months. You gained all that experience. There are countless stories of fund managers going from 400 million to 0 back to 3 billion. There's always someone who's done it bigger than you. And you can always come back and do it bigger than you once did. I don't care how big the numbers get. There's always a story out there of someone who had a wilder ride than you. Fucking dust yourself off, do it again. Bigger. That's how I would emotionally deal with that. And within this range here, again, there's a flat top there, 4 bars in a row. Let's see if the bulls can break that out. All right, there's 17.4. That's a tier 3 level. No big deal. Do other streamers not mention copier issues because they only trade with one firm? I imagine linking multiples makes it difficult. I don't know. Do they not mention copier issues? Copier issues are part of the game. It just is. All right, let's see if we can get a bull sequence going here. Even with the best copier, sometimes you're going to have problems. So, I don't know. A minute 45 out from the close of this 2 minute. If we can get a push higher and close near the high of this 2 minute bar, I buy the rollover. $60 seconds out from the close of this 2 minute. Bear is wicking it back downside here. Let's see if we can get a bull pop up through 17,450 and then a close near the high, ideally for me. Tubed out. I can definitely leverage my experience. This is the guy who went from 25K to 2 million back to 25K, by the way. I can definitely leverage my experience for more sustainable returns, but I kick myself for not taking out $250,000 and keeping it in cash. By the way, that's a doji bar, so now I'm watching this next bar to see if the bulls can take it higher or if the bears end up reversing here and we end up seeing the early formation of an ascending channel. Either way, I don't care. Just give me a setup. He says, I can definitely leverage my experience for more sustainable returns, but I kick myself for not taking out $250,000 and keeping it in cash. Well, let's talk about what that would look like, by the way. Yeah, sure, it'd be really nice to have that right now. However, if you did do that, you kind of would have gotten away with whatever behavior caused you to go from 25 to 2 and then back to 25K, right? So who's to say you wouldn't have just repeated that, trying to go from 250K to 20 million and just lost the 250 anyway? Probably wouldn't have learned the same lesson. And I know you're probably going to sit there and not believe me, but the lesson you learned is worth is worth way more than 2 million if you leverage it properly. If you just take it on the chin and lay down and give up on trading, then the 2 million's gone. That's a big lesson, and I would argue is worth more than 2. That you wouldn't have learned it had you not gone all the way back to 25K. Worth thinking about. Sitting here waiting for someone to break it out. Bulls, bears, whoever it may be. Give me something here. Yeah, today is certainly a range day. It's a little bit of a wider range. It's leaving open some opportunity for continuation inside of ranges. If we end up seeing an ascending range here, this is getting a little bit tight. See if the bulls can break out of this. Again, this is pretty aggressive ascending though. And the more aggressive a channel like this, the more probable you end up seeing some kind of breakout in either direction, by the way. Meaning the less likely I am to actually trade the channel. A lot of back and forth here right now. Inside of this little 4-bar range. Nothing here for me yet. A lot can change though. Just give me 4 to 6 minutes. A lot can change. All right, if we can see buying pressure really pick up against 17,450 tier 4 level, no big deal. If we can see buying pressure pick up here and see kind of a non-negotiable upside continuation sequence through any prayer the bears would have of this being an ascending resistance, all of a sudden then I'm buying the rollovers. But if we also put in 3 touch points, which we really only have 1 at the bottom end of this range, then I'm buying ascending support for little channel scalps. Those are my 2 ideas currently. Are you in any trade? Nope, flat right now. Couple so far here today. This is a grindy market right now, huh? No, Zachary, it's not just you. For me, I'm really not getting any third touch point attempts as far as a channel here. Which leaves, okay, we have a big range, right? I mean, if we look at the 5-minute, we have kind of a big range day. So what are we looking for, right? Well, continuation scalps inside of the range would be nice, which we took one. That's what got us back to break even on the day, or a little in the green, not much. But those aren't happening too frequently right now. So patience, sit and wait for the market to give you what you need, and then hit it quick. Man, look at these wicks. We are really in a channel right now. Well, I'll say a range, not too much of a channel. When you get tight little ranges like this, I mean, the ATR is still over 50. It's at 54 right now. So these break eventually. Question for you. When you meet your profit target for the day, do you still trade? What is your take? Well, I don't set so much of like a hard cutoff profit target. I just trade good setups until volatility either dies or the setups are no longer, or I need to go somewhere, or I don't feel like sitting anymore. If you set a hard, which in the beginning, by the way, you should, 100%. But if you hit your profit target for the day, and you set a profit target for the day, I mean, you probably should walk away. That's why it's a target. However, if we look at the math, which is kind of why I don't do that anymore, the math says that if there is a setup with edge presenting itself, it doesn't really matter where you sit P&L on the day, you should take it, right? Because it has edge. Obviously, when you start putting in human psychology and emotions into that becomes a worse and worse take. That is the mathematical reality, though. However, in the early years especially, you should set a profit target for the day and respect that. That's why you have it. Because it's really emotional to hit your target, keep going, and then hit max daily loss. Now, Justin, that wasn't a third touch point for me. Not only did it not reach high enough, it also was a consecutive bar to a previous touch point, and that channel is way too tight for me to scalp it based on the volatility. It's just tempting breakout too much. All right, well, here's the 20 EMA on the 5. I'm sorry, on the 2. Here's the 20 EMA on the 5, coming into that shortly. So within this little range here. So See if we maybe widen this out and get a real channel going. And then again, I'll hit it with limit order scalps, little reversion, limit order scalps. But since we are in a big range with room for continuation, I mean, right now, if it were up to me, I'd prefer another continuation setup. But I can only take what the market gives us, right? Yep, FOMC, 1 p.m. Central here today. Eric, hit the daily goal. Good work. Good work. All right, so we're breaking downside. Heads up, we are at the 20 EMA on the 5 minute. So this could lead into a setup if we end up breaking that, for me. Again, my setups develop on the 2 minute, and I use the 5 for context. See if there's anything in the way or anything helping me out. 50 seconds out from the close of this first bear bar, I would need to see at least a second. Not to mention we're currently still testing that 20 EMA on the 5 minute. I want to clear that. 35 seconds here. Big bear bar here. All right, here comes the rollover of this 2 minute in 5 seconds. There's the rollover. Retesting the 20 on the 5 minute. This bar is what tells me everything I need to know. This current bar here. Minute 45 out from the close. Yeah, John, this here is Thinkorswim. All right, 55 seconds to the close of this bar. Bulls are really trying to hold on here with everything they've got. See if they can give that up and give me an entry. All right, 30 seconds out. I need a sizable bear bar closing well below that previous bar wick. That's better. Ideally, it close below like down toward 325. 10 seconds here. I will. I'll sell the rollover there. I didn't get the best fill, honestly. Oh, man. Okay, I'm sitting short. Average price, 324.50. I didn't get the best fill. That was not the best fill at all. Stop up at 17,364.50 and take profit down at 17,284.50. Currently about 20 points in the red. Let's see if we can get a push downside toward target. They got a few more stops this wick here. Obviously, I already took out the majority of those, but we have another wick over here. All right, again, stop up at 17,364.50 coming into that. Let's see if we get stopped here. Still in. There we go, stopped. Okay, so that puts us back down 1R. So, see, move on, see what we can do. All right, so now, you know, this is certainly a range day, but again, I'm looking for continuation in between the big range. I mean, you look at the 2-minute. Yeah, we are sitting flat. We gotta make sure. This is a big range here. I'm basically looking at this. Okay, so continuation in between. I mean, that was a pretty good entry. Was it the best entry on Earth? No. The body was shrinking a little bit, but we closed right at the low, just barely below that wick. I had to take that, and we got stomped. So that's first trade of the day, loser. Second trade of the day, winner. And that puts us back down 1R. So let's see what else we can get. Obviously only take what the market gives us, right? We are currently testing, if you look back at the 5-minute, coming back in for a test of the 20 on the 5, as well as the 20 on the 2. So that right there is top of mind for me right now. So we're retesting the 20 on both the 5 and the 2. Gotta make a decision around here. All right, there we go. Testing that little flat bottom there. There's the full look. This bar rolling over in 15 seconds here. All right, now this bar becomes important to me. This could provide us another continuation sequence. We'll see if we get it. Kevin, do you take candlestick patterns into consideration if you see them? Traditional patterns, not as much. I'm more just looking for price action patterns. All right, a minute 10 out from the close of this 2-minute. Not looking too hopeful that it gives me an entry, but things can always change. 60 seconds is a long time here. Oh, there we go, getting a little bit of a push downside here. About 35 seconds out from the close. All right, looking better. 25 seconds here. $15 seconds. $5 seconds. All right, good. And I will get short there on the rollover of that bar. So we're now sitting short. Average price, 17,287. Stop up at 17,327. Getting a little bit of a pop here. Take profit down at 17,247. See if we can get a downside push through 17,250. Currently 10 points in the money. It's a pretty good entry. I'll stand by that. Couple points in the money here so far. Essentially flat on the position as we sit. Test a 17.3. The tier 3 level. Bull's trying to take this higher. But again, still right around break even on the trade here. I don't think they're stop hunting me. I don't think they care that much about me. It's an easy thing for people to blame it on, though. Oh, I'm getting stop hunted. They're stream sniping me. No, I don't think so. Still break even. Again, take profit down at 17,247 here. A couple points in the money. 10 points in the money. See if we can get a nice downside push through 17,250. There we go. 20 points in the money. Not too much in the way between now and then. I mean, I feel fine. That was a good entry. Target really right about here-ish. That's fine. There's really nothing in the way. Few points in the money. Break even. Bulls trying to reverse this thing. Let's see if they can. Again, stops up at 17,327. Bulls really making an attempt here at this reversal sequence. My entry, it was a good entry. Let's just see if it works out here. Currently about 15, 20 points in the red. Yeah, it's pushing up towards 17,327. Again, that's my stop up there. Weak bull bars, but let's see if they can at least get a little bit of enough of a pop to continue this reversion sequence enough. Okay, I'm still in the trade. Stop at 327. Looks like we might get clipped out here. Still in. 30 points in the red. And there we go. We'll get... Hang on, I gotta flatten all these. Okay, so clipped out there. Hey, down 2R on the day so far. Yeah, there we go. That's why you use a stop loss. Look at that bull pump. Get a headline there? That was a big move. All right, so we are down 2R on the day so far. See if the market gives us anything else. I think the 5-minute gives us kind of an interesting look. This is just a little range day here. And my entry was, well, if we look at the 2-minute, my entry was on this rollover into here. I mean, listen, given that setup again, I'd take that trade again. That was a good entry. He's got this big pump. This is why, ladies and gentlemen, you use a stop loss. Big old pump. Now, traders are, by the way, going to be looking at this region here for a potential descending little resistance. Obviously, I'm not going to trade off that, but just worth mentioning. Clean that up a little bit. Well, bull's trying to hold. You see this. The 20 on both the 5-minute. That's what we're testing currently. And trying to hold the 20 on the 2. They're lining up very close to each other. Yeah, reminder, we do have FOMC minutes. It's the minutes that are hitting in 2 hours and 9 minutes. That's 1 p.m. Central. So be aware of that if you're going to trade the afternoon here today. Yeah, these, I mean, look at that 2-minute chart. These wiki candles. Can't trade that. I mean, there's just nothing there. Still holding the 20 EMA, or attempting to hold on the 5-minute and the 2-minute bulls are. Let's see if we can. We're just kind of getting sucked right to that level right now. ATR is still, by the way, above 50. That's the range on these bars. It's still above 50, which is good volatility at this time of day. It's just these last couple bars, real choppy. A lot of wicks, not a lot of decisive action. There's a downside push. You can see that giving it up. Still kind of testing the 20 on the 5-minute. Bear's trying to take it lower though. All right, bears are breaking the 20 on both the 2-minute and the 5-minute chart here. Now, what we need to pay attention to is, do the bulls see this and think ascending support and hold that? That's the next checkpoint we need to see. All right, here we are, coming in for a test. Let's take a look at this chart. watching that to see if the bulls see that or if the bears just plow right through it. The bulls, some bulls are going to see that and attempt to hold it. The question is, are they going to be able to? And if we see continuation, it may lead to a continuation setup for me. We'll see. We'll make sure that breaks. Being in a range today, you can, if you get caught trading every single continuation setup at the edges of ranges, usually you just end up taking loss after loss after loss, and then by the time you see what's happening, it's too late. So you want to be aware of taking continuation inside of brutal range days as early as you can. You know, right now we're only down 2R, which really is no big deal. But for additional continuation setups, I need to see really high quality with very little in the way, which is basically always the case anyway. Does it mean anything to you, Mitt says, when the 20 in the 2 minute and 5 minute are close to each other? It just beefs up how relevant the level is to me. Still not enough to trade on its own, but if you have like a trend line that I'm trading off of, for example, and it happens, oh look, the 5 minute and the 2 minute both have a 20 EMA riding on that exact trend line in the same spot, it just beefs up the reasoning to take the trade, usually slightly beefs up probability as well. Which, by the way, when I say something has good probability, I'm not talking 98% at a 1-to-1 reward to risk. I'm talking like 55. That's all you need, though, is 55. That pays the bills and more. All right, let's see if the bears can break this level. The bulls are certainly seeing it. As previously mentioned, the bulls are going to see that and try to hold that ascending support. Let's see if they can. A little bit of a bounce. Remember, guys, FOMC at 1 p.m. here, Central Time, that is. Gonna see some volatility. Usually with FOMC, by the way, it's like 15 minutes max. This is the minutes, by the way. This is the FOMC minute release. 15 minutes of volatility, and then it's usually kind of back to normal. If you want to use that volatility, try to pass some Apex evals. Be my guest. It's 50% off single day pass, which means you can pass in 1 day. Make sure you use code BIG, and you'll get both of those. It gives you the best deal all the time. By the way, Take Profit Trader right now is 30% off, no activation fee. I'm trading 2 Take Profit Pro accounts. Same code, BIG, B-I-G, always gives you the best deal right now. Again, 30% off, no activation fee, which, by the way, depending on what account you choose, that no activation fee can make it cheaper than Apex. A lot of people don't realize that, and you get daily payouts. All right, guys, well, that's going to be it for the stream here today. I'll see you tomorrow morning. Subscribe to the channel, 8:15 a.m. Central Time, live every single day. You know what I'm watching here. All right, guys, see you tomorrow. Have a good one.